Welcome into another episode of the Real Estate Minute Show. Thanks for taking a couple minutes of your time today. So we've all heard about inflation. You think about gas prices, food, all kinds of stuff. And you look around. I mean, airline flights up 30%, etc. The overall inflation rate right now, I think it's just under 9%, about 8.6, 8.7%. That is gigantic. And just to give you kind of a frame of reference, back when we were doing, and we still do, commercial lease negotiations, that we would set the annual increases on those leases to be what they call consumer price index, which is another kind of more localized version of inflation. So they have one for LA area, they have one for an area down south, they have one for area north, and all different parts of the country have their own consumer price index for their specific area. So we would increase rents for commercial tenants based on the increase in that CPI. And usually there would be a minimum and a maximum. So like no less than 2%, no more than 4%. And that was like kind of, it was always about 2-3%. And that's just an annual kind of inflationary figure. We're 3 times that. Okay, so just to give you kind of an indication of where we're at, it is very serious and intense. And increasing interest rates, the Fed increasing rates by a quarter, 3/4 of a point, another one coming up in July for 3/4 of a point. That is full-on federal government panic over inflation, just so you kind of have a frame of reference of historically, because I've been watching this stuff for about 25 years. So what does it all mean, though? What does 8.6, 8.7% inflation mean? So it means that if you go to the market and you buy a loaf of bread and it's 10% more than it was before, that means that every dollar that you earned that week to buy that piece of bread is worth 10% less. Normally it'll go up like every year. Maybe you'll see a little tick of a dime, something like that, which is the 2-3% inflationary figure I'm talking about. The normal cost of doing business just goes up slightly. People's wages go up slightly, insurance goes up slightly, and the cost of the bread, therefore, goes up slightly. But when it goes up 10%, your cost of money, not only is it costing you more, but the value of your money is 10% less. So what are you going to do about that? If you earn $50,000 a year, $100,000 a year, and next week you're really actually only earning 90 because you only have $90,000 of buying power now because it went up 10% or so. What are you going to do to offset that? So people offset inflation by passive investments. But you have to find something that's generating at least 8.6, 8.7%, which is the inflationary figure now, to break even. So if you take $100,000 and you stick it into some sort of mutual fund that is doing 10% or so, that money offset will provide the offset to your earnings, which are not increasing by 10%, and you're breaking even. You're okay. You're protected. So every dollar you put into the economy is costing you 10% more now than it was before. Any dollar you put into a passive investment generating that same return, like 8.5 to 10%, is going to kind of balance you out of that economy. So the focus today and the message today is just a quick little snippet on what inflation actually is and what's going on. And it is going to be prolonged and protracted. Is how do you offset that? Try to offset it. Take a little money and try to get 5% in a mutual fund, in some sort of safe bond fund or something like that. If you feel more aggressive, there's 15-20% returns out there. It's super risky, and that's up to you. You can go to the crypto market, which is in the tank. Up to you. If you want something safe and you want to offset some of that 8.6%, find something at 4, 5, 6% return. That'll help you offset just a little bit of the bread cost. It'll bring that 10% bread cost to 5. And a little bit easier to stomach, okay? If you can get to that 2, 3, 4% normal inflationary annual figure, excellent. You do that with investing. All right, take care and good luck with this inflationary economy. We'll get through it together. This is just ways and things that we advise our clients on how to get through them. Have a great week. Take care of yourself.